Understand. Good afternoon. My name is Vijay Raj, and we got a team of analysts and highly intellectual people with regards to the markets and those. We got Chai, we got Gaurav. It's a Christmas, so have Merry Christmas and looking forward a Happy New Year as well. Little bit drama of Omicron happening as well, the viruses, and I hope and good wishes that the next year will be very good and things will be good. That's perfectly. And today we will talk about the blockchain, cryptocurrency, and what are those technologies and around, and what are the implications of those technologies. I think Gaurav met a lot of few people in there with the analysts and some of the company into that spheres. And I think Chai also met a couple of those people as well. And so I think I was studying two books, I'll tell you. One was the blockchain revolution. So a couple of things you might get some ideas from there. And the second one was I was reading this, the applications of blockchain. After a while, I did engineering, MBA, MCOM, and 15 diplomas. Still, I never become intelligent. I hope one day I'll become. But let's start with something on the internet and those things. Chai, what do you think? What is this blockchain thing? One liner in a very simple words.
Just very interesting and very lucrative. The technology is very, it stands to be revolutionary in the financial banking space, especially. But obviously what's in the media right now is Bitcoin and cryptocurrencies, where people are looking at the performances and the returns that some people are making, and it's amazing.
Yeah, look, I think you're talking from the investment perspective. Yes, we will talk onto that line. I mean, which companies we should be going for. I think Gaurav will be talking about two of the companies. One is about Coinbase. What is basically it is exchange and exchange for the cryptocurrency, what you buy, what you sell, and those kinds of things. And the second is I never thought this Riot blockchain, that a mining company would be there. I can't believe this world. Anyway, that's all the world is about. We need to adjust. We need to learn what is happening in the new world. But anyway, Max, fantastic. Good to see you. Good morning.
Good morning.
What do you say about this, the new world of blockchain and a lot of technologies coming in there?
Look, blockchain in a nutshell is a database. That's what it is. Blockchain is a database, and it's a database that's going to be in different to your usual database, which are behind the firewalls and privacy walls of individual companies. It's more of what they call a distributed ledger system. So it's open system. It can, people can openly have access to writing records into these ledgers or these databases. So effectively what it's bringing is what they call more of what's the term I'm looking for? Trust in the way commerce is done online, effectively. So it's bringing trust between individuals when they're transferring money from one part of the world to another part of the world without the need for intermediaries to mediate that trust. So if you're buying goods out of China, and you need to send money to a Chinese vendor, but you don't know whether the goods are going to be delivered or not, blockchain will sit in the middle where the vendor or manufacturer out of China will be able to see through the blockchain that you have the money to pay what you're about to send to them, and equally the vendor themselves will be onboarded through their wallet system and through their own KYCs onto the blockchain to be legitimate, basically. So you won't have the letters of credits and that type of thing as an example in between and paying huge sums for those transactions. So that's just one example. So some people are calling it Web 3.0 or various terms.
Yep.
So
I will go into that more detail. I'll explain that. But I think very good. I think next year's quarter, I think we will talk into a little bit onto a couple of slides onto, but we will go into from a technology perspective, from the investments perspective, and what actually I had one of my very, very good intelligent men Minson Kim. He especially come in to know exactly what is this. Hi, Minson Kim?
Yeah, that's right. Yeah.
Yep. Okay. Let's talk on to the topic in more detail. So first, let's go with 1970s. The computers came in and the internet came in. So the two computers, peer-to-peer, start talking. And then they set up the protocols, TCP/IP, transmission control protocols, TCP, internet protocols. Then slowly the network start developing. Okay. Further on, with this whole network, the Ethernet network and the same protocols of TCP/IP went on going on there. Simultaneously, crypto. Crypto means what? So crypto is something which is embedded, and you don't know about the somebody cannot copy. It's encrypted, encryption. So that's a crypto. So we're talking about encryption. We're talking about technology. So when we talk about this now, in 1995, the internet came in. So internet came in, and then another 10 years we further on to see the implications. So there are a lot of companies of dot-com booms happened around 99, 2001. So I think we had a similar situation in 2017, 18, where a lot of ICOs, Max, do you know IPOs and ICOs? A lot of ICOs that came in 2017 and 18, and we talk about those in the detail. Now, what is the blockchain? So blockchain is a technology which, as Max explained, it's a peer-to-peer network. It's authenticated and trusted by the open book system. It's a public ledger system where all the details were into the public, and that can be checked. It cannot be changed. But what happened and who has suddenly where the interest has came in? So we go back around in 2008. So 2008, GFC, global financial crisis, and then we have Lehman Brothers, and across a lot of big financial institution were in trouble, the GFCs, and people lost the trust and faith into the financial institutions and the monetary policies and those things. In 2008 we're talking about. At that time, few of the programmers, they got together and they started, and one in the name of Satoshi Nakamoto. So that pseudonym, nobody knows, but then they opened up the Bitcoin. So the Bitcoin as just is money. Money is a, what is money? So in olden days, it was a barter system. There was no money. Then in the Middle Ages, coin came in, and then the paper money came in. And with the paper money came in, on each of the paper currency or plastic currency, the polymer currency, now we called it. And in this, they write it that I promised to bearer to give that particular amount of money. So, and now with regards to the same, cryptocurrency had been started as a first level of a blockchain technology. Okay, so cryptocurrency was one of the application. So it's a digital currency, and that was the application. Then in 2013, you have a platform as a second level of the blockchain, because it's a different version. So second level versions where Ethereum platform came in. So what was the Ethereum platform was looking for or going for was technology. It was looking forward to make the contracts and confirmation and validity of contracts. So that was the whole concept that went in. And then by 2017, so I think before I go into detail, but that's what happened. So the blockchain is a technology, and now we looking forward how it implicates the world and what as an investor we should be looking and doing, and what but before I go, look, it's all millennials, new world people, young generation people. You go on the internet and you type a crypto and you see, Max, you don't see any person like me and you.
Yes, it takes a bit to get through the words and buzzwords, you know. It's but yeah.
So yeah, it was surprising. When I was yesterday, I was looking for those things, and I was so shocked that look, anyway, but that was all the millennials did. It's all about this industry. But let's go out and get into the more details of that. So again, same thing happened with Bitcoin. So Bitcoin is a digital gold. It has a value, should be investing or shouldn't be investing. So it becomes a digital global currency. What are the implications and why does it has a value? First thing, intrinsic value, because anything you have, you should be having intrinsic value. And why should the value is increasing? So let's go in more detail. What's happening in there? Next, please. Okay, so before, I think, sorry, the last slide, please. Yes, so Combank, the Sikh founder says that crypto is like the early days of, just we talked in few seconds back. Again, it was the same dot-com boom of 2000, which we talked about. So a lot of companies will be coming into that internet explosion sphere. So same as a lot of companies will come in, and this blockchain revolution coming into the things. And let's see which company, because not everybody out of thousands and thousands, not every company will become bigger company, but few will definitely solve the problems of the people. They will make the structure, they will make a product, and that will drive their future returns and those kinds of things across, and future markets for that company as well. Next, please.
Vijay, can I just add something to that?
Please.
Like, I was thinking about how this time is a bit different to in the mid-90s and the late 90s when the internet was just fledgling. It's actually a bit harder for investors to decipher all this technology. Back in the 90s, you didn't really have to understand the back end of the internet. You knew that there's this thing called internet. You log on using the old, the portals that you had on the modems. That's the word. It's such an old term now. And you logged on and you could see web pages. You didn't actually go to the back end of how the internet worked and all that sort of stuff. Now, I think with this blockchain technology, the technology does take a lot to understand. So there's a technical barrier for people to understand that. But I think the focus should, as much as possible, be the use cases to really see the opportunity, what is in front of us, and not get drowned by the technology with coins and Litecoins and Ethereums and all that sort of stuff. We do need to understand it, but it's easy to get drowned by the terms and the technology. That's all I'm saying.
Yep, absolutely, you're right. As you said, look, that first from 1995, when the internet and those things came in, that was a web version 1, where if you look at the scripts were HTML scripts, and then you had the dynamic HTML scripts, and then dynamic pages starts coming in where you interact with. Now we are looking around that with the mobile phones, smartphones acting as equal to similar to computers.
Yes,
the distributed system or Internet of Things are playing role.
Yes.
So that will, but the products, what products will coming out, that is or how it will be inculcated in those industries like banking, fintech, insurance, payments. You give an example of payments. And same as I was just reading one article that so many Western Union's outlets are there across the world. But when everybody has a smartphone, do you need that?
100%.
So some of the implications of the technology we need to be working out. And Internet of Things, where the things have become more live with the technology, and you just press the button and your AC starts and your smart houses and those things. So the new jobs into those areas will be coming in.
100%.
Yep. So let's talk, I think, so as we talked about 7,557 companies on the cryptos. Can you believe it? So that was a big numbers. It is more than New York Stock Exchange and ASX Stock Exchange. So same as internet boom type thing, So I think this happens in any industries, because now so much of money going in, there will be a revolution happening in the technology area. So let's go next slide and couple of more companies. I think we all know a lot of companies there, but let's see this. We're talking about the Bitcoin. That is the biggest into the world. I think approximately 2.5 trillion, I think, of cryptocurrency market is there in the world. That's a big numbers, So Bitcoin is leading into the crypto markets. And then we have Ethereum, which we talked about the smart contracts. Binance Coin, it is one of the largest token thing, and the operator as well. And then we have Tether, Cardano, Solana. These are few of the top level companies. So 90% of the money that is invested in the crypto, those things. These are the top cryptocurrency. So crypto, again, I said, look, it is one of the applications of the blockchain. And these are, and then Ethereum has a different applications, and crypto will be, the Bitcoin has a different, it's a currency base, and Ethereum is a contract base. So these are the applications from the fundamentals of the blockchains are coming up. So that's, but these are a couple of largest cryptocurrency based companies into the world. Next, please. Now, Coinbase. Now, Coinbase, I think Gaurav is going to talk into more detail about Coinbase. But look, I think if you look at this in more detail, that the biggest currency crypto exchange, I think Gaurav is going to talk about, should we buy, should we sell? I mean, Coinbase is listed on NASDAQ. And any idea about, Max, you got any idea about Coinbase? Little bit, very small.
I would leave that one to Gaurav.
Okay, so we'll talk in more detail. Yeah.
But let me just say that, I'll just add the fact that we've looked at 2 slides here. It's very important to understand the first slide was about cryptocurrencies, so individual currencies that, such as that's it. Bitcoin and Ethereum has a currency token. Binance Coin. These are actual currencies. The second slide actually shows the exchanges. So once you've got a currency, Bitcoin, how do you want to buy and sell? Where do you store it? So these are the exchanges that enable that. A bit like a stock exchange, buying and selling of stocks. We've got crypto exchanges as well. Yep.
So I agree with you. I think it's the same as the crypto exchanges. So Binance is one of the biggest in the world, and then Coinbase will talk into more detail. We should buy, sell, or whatever into more detail. Let's keep on to the experts. I will not say about that. Next, please. Okay, so value of the cryptocurrency. What is the value? That's a big term coming up into that system. So if you look into the values, I talked about that. Approximately in 2018, $950 million that was a theft came across. I mean, what is that theft? So theft is basically, now who is responsible? So if you got a bank, so this is one of the risks which we are carrying into the crypto markets. So Max, what do you say about this crypto theft?
Yeah.
Because what did I initially I had the thing was that most of the dark web operators are using that. But when I saw the statistic, it came around because now the industry in last 10 years, anti-money regulations and those things, and government has started accepting. So I think most of the ID checks and those things are already done. And but still, then what is this theft about, hacking about?
Look, I mean, you're storing value essentially in a electronic currency. So when it's saved digitally through the wallets system, there's different types of wallets. There's hot wallets, cold wallets, whatever. But at the end of the day, you've got an electronic form of value that you've stored somewhere. So therefore, it lends itself to hacking, penetration of, by thieves, basically. So there have been, so that's why the exchanges that you go on to buy and sell and store these currencies, is very important that they are well capitalized and have got, obviously a lot of funds to, invest in their privacy and security infrastructure. So that's why I think longer term, you will get a breakout. Obviously, there's a lot of exchanges popping up everywhere saying to the punters, oh, look, we can do this for you, at whatever commission. But I think there will be a breakout. The larger companies like Binance and Ethereum and others will get larger because of the safety and security that they provide. And as you can see, there have been thefts of crypto wallets since 2016. It's an increasing trend. But that is also a proportion of more and more transactions are taking place as well. But something to be aware of if you're going to hold.
I think that is basically the banking sector. The government, suppose we have in Australia that they takes a guarantee, but now with regards to this one, there is nothing guarantee onto this whole thing. Now, yes, look. the only investor need to be careful of a small crypto exchanges to what is happening into these exchanges. So yeah,
these are a couple of Australian examples. Crypto wallet collapsed. It was a small exchange out of Melbourne. And in the end just went into administration, and people had their, Bitcoins or whatever coins that they had stored with them, stuck pretty much. So that's, again, would be, I would hazard caution dealing with smaller operators.
Yes.
Yeah.
Because still the industry is not regulated that much. So hence that is the challenge of the regulations. And we should be looking around to be before you. So I think, look, very honest and simple. 90% of the money is in the top big companies. Top 20 or top 10 companies. So I think we should be sticking. You should, if you want to invest into a crypto or any other things, where you should look around to what exactly it solves the purpose. Because if there is no benefit, then there can be a lot of flyby operators who come in, and then 95% of the people lost money in 2017. I think so. I think we should not do that mistake again, because it is like this. The people who made it, they said, "Oh, I made it a lot," but then you have only 1%. It's a gambler's policy.
That's right.
I made it, but the 99% didn't made it, and they're not saying anything. So let's be careful not to that. But I think most of the people in Australia, I think Bitcoin is a major one, Ethereum is a major one, Dogecoin and Bitcoin Cash are the people who are interested into that. Next, please. So what are the reasons? If you look around, I think it's very, very simple, very, very, but the 30% of the people are saying that it's a portfolio diversification, which technically is good. And that is one of the major reasons to be investing. And as I said to you, Bitcoin as a gold in the first slide itself, that it has some intrinsic value. People are feeling that the value will increase, and hence henceforth they are looking forward. 10% of people are saying it's a hedge against inflation. Yes, the currency depreciates, and this is a hedge against inflation considering that scenario. Leading reason for non-investing. I'm one of them, okay? So I'm a little bit concerned. I'm from Vincent, from today onwards, I'll be looking into this, but I'm a little bit conservative. Maybe, Max, are you conservative as well, right?
I'm very conservative, very conservative.
Yes. No, I opened my account and those things around 2017, but then I was too busy into other things and I let out. But I think it's time again to be looking into this one. Yes, it is an important aspect, and a lot of things will be changing. So, sorry, my opinion, me and Max are a little bit slower onto this.
Yeah, absolutely.
Again, it's a volatility as well, because 30-40% volatility. And again, it's a people's money as well. As a portfolio manager, analysts, and advisors, we have to be a little bit more concerned. And it's better not to be having than taking that chances. But yes, 10% of the money should be there as an appetite. Shouldn't be an issue. Next, please. Again, these are the age group of the people. So most of the age group, if you look around 2019 and 2020, so around 30-40% of the people, they were into age group which are absolutely the blue is 25 to 34. So yes, I thought about this. All the millennials in generations, they are into investing majority. And I think the smaller proportion is the other people. What are the challenges of investing in crypto? In Australia, if you look from that perspective, then market volatility, yes, an average 30% market volatility is too high. So very, very, if you got a risk appetite of losing, go for it. That's it. That's one of the things. But slowly, as the acceptance will increase, the volatility will decrease, because this is the first phase. That's why now and people have understood, things have been coming across, and a lot of governments are started accepting the coins as well. And the problem is this. Well, let's consider: are you using the coin for buying and selling, or are you using for a legal tender? So legal tender, no, nobody is using at this. I mean, the only country, El Salvador, is using as a legal tender at this case, where you can give the money in the only in the Bitcoin or US dollar terms, but no other country. Anyway, if you talk about the bigger space, I think a lot of countries are in the middle level. They open up a little bit here and a little bit there. On a bigger countries, China and Qatar and those, they are absolutely banned onto this one. No. So we have to understand that as well. So if China comes out and say, oh, this is then that we are accepting, there will be 10 to 15% jump in the market. So we have to understand those news and implications as well. Next, please. Apps Australians are using to store crypto. So these are the different applications which the crypto you are using. I think eToro, Coinbase, and there are few of them into that one. So I think they're all similar into that one. I think you can use those which are filled. Again, it's a no advice, just a general opinion as well from an analyst perspective. So please, a general advice opinion only, please. Next. Again, look, the surprising, this is, I can't see Europe into this. Max?
Yes. Yeah, we're going to look at a couple of slides here. The first slide looks at the number of, the amount of population that is buying and selling these currencies. On that on that metric rather, you've got the emerging countries like Vietnam and Thailand, smaller countries. More and more populations of these countries are actually, dabbling in cryptocurrencies, as compared to, Australians. There's only 8% or thereabouts of Australians, going into these currencies. Yeah, on that metric, yeah, absolutely.
Yes.
Nigeria is right at the top.
Yes, I'll talk into this Nigerian and I'll talk into this both the things. So in the Europe, the average age of the people is 44 years.
Good point.
So demographic plays a very important role here.
100%.
Okay. So when you itself you say the users, so mostly that is one of the reasons Europe is not here. So average age of the Europeans, Japan is not there. The average age of Japanese around same ballpark or 44, 46 years, so that's why they are also non-numbers. But the young generation like Vietnam, Thailand, and the demographic is the young generation people, so they are accepting and they're moving in very quickly into there.
Yeah, very good.
Please. Developed country anyway, that will be in a dollar value trading, definitely, because being a richer country, there is a more possibilities. So US is dominating, Europe is dominating, and China, the rich countries are dominating in the trading volumes. Yep. Now, what themes that is, or what we should be looking around? So what are the industries where those things will be working in? We have to be looking around. So I think a lot of companies in US are coming up, in Europe are coming in, and exchange traded funds are there also now coming up into those. That will help to be logically accepting this industry in a more official way. So I think it is a turning point. I think 2020, 2021 is a turning point of acceptance of the industries. And because in the first phase, a lot of those companies are without any projects and ideas, and just with the open ICOs and those things opening up, they're all shitcoins. Or I think, do you know Max, a shitcoin name?
Yeah,
there are a lot of shitcoins under those things.
I think majority of them are that.
Yes, absolutely. Yes. Okay. Next one, please. Okay. So again, look, investing in the crypto is like any other business. A business should solve a problem. A business should solve some problem. So talking about Bitcoin, then Bitcoin is solving a problem. That, okay, which problem is that? That, okay, the transaction cost, the efficiency. Like if you send an email, it goes in 1 second over there. Then why cannot money can go? Transaction cost, different currency fluctuations and those things, the changes in government policy, inflation and those things, and the hedge against those things. So these are a couple of problems. Yes, there is a possibility of big Bitcoin going in over there. Then again, Ethereum, yes, there is some business issues in over there. Okay, they are trying to sort out that what can be done about the with regards to smart contracts, escrow accounts, distributed systems. Yes, that is some of the possibilities of this industry. So again, 90% of the monies are invested in the top 10 or 10, 15 companies. So be careful, understand the company, understand the concepts, where are they going, and what is the business plan, who are the business leaders, what big companies or what the investors are going into that, if they're putting their money. Yes, definitely, these are the things which we should be looking for. Yep. And now we should be looking around two important options onto that. Now, number one, Gaurav will talk in more detail and Max will be talking in more detail with regards to one was that I talked about is Coinbase. So Coinbase basically it is having a global cryptocurrency exchange, and Riot blockchain. So Riot blockchain is looking forward to into the mining of the Bitcoins. So Gaurav, back to you, please. Thank you.
Thank you. So, okay, so let's start with Coinbase. So Coinbase is a leading exchange for crypto assets. Like think of it as an ASX or NYSE for cryptos. It's a leading exchange. Having said that, it stores about 11.3% of global crypto assets. And it's the largest US-based crypto asset exchange by trading volume, with the platform maintaining about 73 million verified users, having about 9,000 institutions and about 160,000 plus ecosystem partners across more than 100 different countries. How does it generate revenue? Yeah, can you hear me, right?
Yep.
Hello. Yeah. So yeah, how it generates revenue. So its biggest revenue comes from transactions. So when users go there, they transact. Coinbase earns a fee on it, and then a smaller part of its revenue comes from subscription and services, which is now becoming a major part, and management wants it to become a major part to take out that trading volatility. And subscription services like staking, custody as in the storage for Bitcoin. Next slide. So okay, so what differentiates Coinbase? First, the biggest differentiator would be ease to use. Now, most apps in the blockchain world were actually designed by developers and for developers, thus requiring understanding of code base, making it complex for an average person. But Coinbase has simplified the operation where someone can buy a crypto in less than 2 clicks. Coinbase is crypto native. So what that means is Coinbase has effectively integrated with blockchain and fiat currency rails, which remains a major differentiator compared to brokerage firms or fintech competitors like Robinhood. So for example, so if you buy a crypto on Robinhood or another brokerage firm, you don't own the underlying asset, but you only own price exposure to it. Versus when you buy, when you do a transaction on Coinbase, it gives you the right to underlying asset. You own that underlying asset, and you could go on and do whatever you want to do with it. The third and the biggest differentiator is it's secure. So compared to decentralized exchanges, it offers a more safe and more secure platform. So with more safe, what I mean is, so for example, cryptos are, so for example, like if you store a crypto in a self-custody wallet and you lose the password to the wallet, the crypto is lost. It's lost forever. There's no way you could recover it. However, if you lose a password to coin, it can easily be retrieved. And also, you could think of cryptos as bearer assets. Like whoever owns the keys to the coins owns the asset. So it could be hacked. But the company invests so intensively in cybersecurity thus making it the largest running platform where till date, no customer has lost any funds due to security breaches. Now, the company's growth can be divided into two phases. So the first phase is basically broadening the depths of assets available for consumers. They started with Bitcoin, but now they've come to a point where more than 100 assets are available for trading, and the company continues to add in more choice to consumers. Now, phase two, which is crypto as a utility. What that essentially means is once the consumer has done the transaction, once the consumer owns that crypto, how they would interact with the ecosystem. Now, that is the next leg of growth for Coin. And what management essentially believes is more activity that is happening in the real world would be migrating on chain with all these metaverse and everything like this coming online. So the company is looking at options to increasing consumer interaction via non-custodian wallets, building DeFi app platform, and building their own NFT marketplace.
Yep, fantastic.
Yeah.
Yep. And Gaurav, one more question is like if you look at the chart and to the what do you think about the fluctuation volatility?
Yeah, so the company's stock price has a high correlation with crypto pricing at the moment because it's monthly transacting users and their exchange revenues are highly correlated with the price of crypto assets and market volatility. Now, what that essentially means is if the price of the crypto goes up and the volatility is high, new users join in and existing user base becomes more active. Thus, the company starts earning more revenue and the stock price goes up. But however, going forward, what management is trying to do is it's diversifying its business with crypto assets beyond Bitcoin and introducing new products and revenue streams and making that side of the business as a major revenue earning revenue from those major streams. And with that will balance the volatility in the trading business, and we should see the volatility in the stock price decrease as well.
Yep, no, fantastic. I think that was a good explanation. Thank you very much. I think I like the idea. I think the company and the market capitalization and the business model, because the most important thing is the business model, where the money is coming in. The money is coming in simple, that okay, if this industry goes, this is the exchange, you need an exchange. So that's it, as simple as that. And then they are trying to diversify into further things. Fantastic, Gaurav. I share those beautiful experiences with regards to that into your research field. Second stock, Riot blockchain, again on NASDAQ, please.
So Riot blockchain. So before I start with Riot, let me just tell you, like, okay, what are these miners competing for? So like Bitcoin transactions are essentially pooled in a block, and miners compete to solve that block and are rewarded with Bitcoin. Now, at the moment, the reward is about 6.25 Bitcoin per block solved, which totals to about 900 Bitcoins per day network-wide. I mean, you cannot, and all those miners in this world are competing for those 900 Bitcoin a day. And this is where Riot comes in. I mean, there are a lot of different miners. You could invest in different miners. But so Riot is an integrated cryptocurrency mining company. It's solely focused on mining Bitcoin. And it has established itself as a leader in Bitcoin mining. Now, currently operating about 2% of global Bitcoin mining capacity, and it also focuses on being the lowest cost producers. So at the moment, the company is producing Bitcoin for below 5,000 USD per Bitcoin. And with the current price of Bitcoin, you can see like that leads up to a very high margin. And according to the company's modeling, with assumption of difficulty rate going up about 120% a year, it expects the break even in 2026 to be $20,000 to $25,000 per Bitcoin. So, right, even if the price of the Bitcoin remains what it is today, in 2026, the company would still be making money.
Yep. Now, Gaurav, I think again the question is this way: that in the initial days, there were small retail miners. Now you're talking about the commercial miners.
Yeah.
So that was the one important point. Now, second important point is do climate change and all the things will affect this industry?
So climate change.
The first talk is retail miners and versus commercial miners.
Yeah. So basically, what these commercial miners, they are big players. Like they deploy about 80,000 machines that are mining Bitcoin every day, running for 96% of the time. And what that essentially means is, as I said, everyone is competing.
So it means, sorry, Gaurav, to interrupt. It means that a small miner, like at my home, if I mine, it's not worth for me. Is it that?
Yes. So as more and more Bitcoins are being mined, the difficulty is going up. So with the difficulty going up, you need to deploy more efficient machines. Second, you need to expel more energy, your energy cost. You need to expel more energy for them to keep running to mine that Bitcoin. So with these commercial miners, these guys are going for vertical integration, which is they are setting up their own infrastructure. They are signing up contracts for low electricity, which gives them an edge over a retail, like a small miner.
Yep, fantastic. And the climate change, I think you said more into those industries where, more areas where renewable energies are using that can be considered.
Yes, so
what you mean?
So one of the how these companies are also ESG focused is as these Bitcoin mining serves as a complementary technology for clean energy production and storage, because they require so much energy, and given wind and wind and solar are the least expensive energy sources in the world, these companies push to for the world to transition to these companies, for the energy companies to build more of the solar and wind farms.
Fantastic. Well, thank you very much, Gaurav. That was very good. I appreciate. And thank you, Chai, and thank you. I think it was a very beautiful way of looking at. Again, we end up in over here. Look, this is a cryptocurrency. It's the whole blockchain industry. The blockchain industry. In the blockchain industry, in one of the usage is a cryptocurrency. In the cryptocurrency, Bitcoin has come across more, even into a little bit on the asset side as well. Then the blockchain is the second version of further more applications coming up, Ethereum and few of the applications coming up. From an investment perspective, look, unless and until the application is there that can be usable and people ready to pay, that company will be making up the roads into the future. So as an investor, please look into those aspects. Again, it is general advice and general opinion is only. Thank you. And thank you from Lebanon Investing and Banyan Tree people. Max, we got Chai, thank you very much. And Gaurav, and Merry Christmas and Happy New Year, Happy Holidays. I think we will see you after first or second week of January. Thank you much. All appreciate. Thank you. We'll see you forward. Thanks, Max. Thank you all. Thank you, Sri.
Guys,
Bye.
thank you.